right. End of February, and my portfolio was ruined by coronavirus. Yes, it was rough. This is Michael EJ of Sophisticated Investor Life, and man, it has been rough. Now, it's expected. It's totally expected to take losses during this time because that's the downside of an option selling strategy. But they expect it to be this bad. So let me cut over and let you see it for yourself.
Okay, let's quickly touch on these things. How bad was the carnage? What was I thinking going in? What should I have done differently? And the key lesson learned. So, diving right in, how bad was it? How much did I actually lose? Now, I'm going to touch on where my performance was in the middle of the month, February 19th. In the middle of the month, I was up 4% total in both my real portfolio and mock portfolio, and around 1% in realized profits, like gains I actually locked in, 1%. And that was February 19th. And by the end of February, things looked pretty bad. Now, actual portfolio ended up being down 16%. And that also included 10% in realized losses. So it went from being up 4 to down 16, a 20% swing, and went from realized profits being plus 1 to minus 10%. You know, that's a real swing. The mock portfolio actually ended up being worse, right? And the primary reason why the mock portfolio was worse is all this carnage was happening while I was at a conference. And I've already learned with this trading simulator, I've tried placing a trade on my phone before. That's when things went horribly wrong. And I had, what's the result? I had this result where, come on, scroll. Oh, yeah. Come on now. I had this result when in reality, this should have been like a plus 1, plus 2, to be honest. So I'm already kind of skeptical of trying to place a trade on my phone. Something went horribly wrong. It happened twice, actually. There's a second trade in there. It wasn't as bad, but essentially I'm not placing it on my phone. But that was a day I needed to place on the phone. You know, middle of last week, I needed to place things on my phone because I'm at a conference. I was able to do it on my actual portfolio, you know, using, what am I using? TD Ameritrade, using Thinkorswim. You know, I could pull over for 5 minutes and just place the trades. Not a big deal. It was the trades I couldn't do. And it came out actually as 2 primary trades. The 2 primary trades that this happened in was Goldman Sachs and SPY. So this is what I lost. This is expected. I mean, it wasn't as bad, but these 2, instead of them being minus 500, minus 600 plus dollars, imagine them both were around like low 300s, right? And that's the difference between realized losses for both. That's primarily the difference. So yeah, that's how things went down. Not pretty at all. So what are we doing from here? Now, this was my plan jumping into a crisis. This is what I thought I was going to do. And what I ended up doing, giving it a try. It was, first off, take your losses. Take your L's. You can recover. You're like an insurance business, okay? If a hurricane hits and you're offering flood insurance, yeah, you're going to have to pay out a loss. You're going to experience major damages, like major losses. But the flip side of it is when that time passes, you know, no worry about hurricane season or anything. You can charge higher rates, and you can regain profitability. So similar to the insurance business, that's how I expected things to work out, and still expect things to work out once the coronavirus scare passes. I also had this idea of maybe let's roll one of these trades. The one that I lost the most, just roll it. See if you can roll it. See if you can minimize the losses a little bit more. And I also had a thought on, okay, you close out as much of every position. You close out all your positions. Now you start putting market ETF trades on. Put on put options as per usual. Maybe an iron condor, but put on put option spreads at about a 0.1 delta, maybe a little bit lower. Put them 3 to 4 weeks out into expiration. Let time decay start to work in your favor. Now, what would I do differently? First of all, I will not have any rolling of the trades. So right now, rolling of the trades. So what makes unrealized look bad? It's because I have this unrealized P&L right here. So first of all, no rolling of the trades, no rolling of Goldman Sachs trade. Yes, I lost a lot, but this position's about to get tested, right? This position's about to get tested, and I rolled it naked scary thing to do. When you roll naked, that's a chance for a blow up. This is not a normal market condition where it's okay to roll. No, don't roll it. And the stock is probably around 197, 198. So if it opens down again, I'm just going to close it. Just going to close it. It's another major blow to this portfolio. But this is actually a mistake I made in my real portfolio too, right? Same mistake. I rolled it out way too far just to recover, and it's just not going to work out. The second one, which still isn't as egregious, right? Because if I check right, it's at 296. So the SPY's at 296, and I set this all the way down at 275, right? For another put option. So this one's not as bad, and it's a spread trade too, and it's more of a trying to make money, right? So that's what I thought I was going to do going in. Now, what I would do differently is don't worry about rolling a trade and literally wait until a green day, wait until a positive day in the markets to finally put on those market ETF trades that I was looking to do. And overall, be more selective. I'm going to say this again, be more selective when trading. And for me to be more selective, I just pay more attention to the relative strength index of the SPY, right? So relative strength index is really good if you're more into mean reversion trading. And I like that type of trading style because of the higher hit rate that's associated with it versus swing trading. So higher hit rate, it's different than doing it with stocks, because with stocks, it's either up or down. If it goes back down, you're pretty much screwed. When you're doing it with options, it creates an even further margin of safety in the short term. So, in doing that, probably the best way to do this is, let me scroll down. Yeah, relative strength index. You can find this on marketbeat.com. And when you track it, the big thing you want to pay attention to is if it's above or below the 60 mark, right? If it's above or below 60, then it changes everything. If it's below 60, you should trade just fine, especially if it's these pivot points where it starts working back up. That's like ideal way to come in, these pivot points around. And they don't come often. And there's going to be days if you're in the trading that you just want to act. You want to take some action, right? But be positive. Not be positive. Be patient. Be patient. Your time will come. It will always come, right? It will always come. So this happens, it is what it is. And once it's above 60, you should be a lot more fearful, right? So a lot of these bringing down, and if I go down to, for example, actually it wasn't that bad at the end of 2018, but in October, things always tend to pull back down once it starts rising above 60. If it goes above 70, you should just get out of any trade you got on. Just get out. Just get completely out. There's a lot worse that can happen. A lot can go wrong than go right. Right? And then throughout 2019, I see why I had a really good year in 2019, because it was a lot of these little bumps along the way. And all you need is a few of these bumps to really, step your game up in terms of trading and how to trade. So if you just wait till it's below 60, you will be good. And I will wait till the market starts to turn back around before putting on another trade.
Well, guys, there you have it. Yeah, it's been rough. Believe it or not, I'm a lot more optimistic than expected during this, because I know I can dig out the hole relatively quickly. Short order, short fashion. That is something that does come with the confidence of option selling, because this is a one-off event. It's not going to last forever. When the market starts turning back around, I can quickly build back the portfolio. It's like insurance. Now, if you own an insurance company and you selling insurance policies, and then like a hurricane happens, and you're going to lose a lot of money during that time period. But once things pass, you can charge so much more in premiums that you can quickly make up your profitability. So I'm expecting to do the same. So I'm just going to have to sit back, wait, and hopefully this coronavirus thing passes over. That's all I have for you all today. Thank you for watching. Stay sophisticated.